Commerce Alive Today presents
Levitz Furniture. The origins of Levitz Furniture lay in the opening by Richard Levitz of a furniture store in Lebanon, Pennsylvania in 1910. With $20,000 borrowed from their father, his sons Ralph and Leon opened a store of their own in Pottstown, Pennsylvania in 1936. According to one account, it was not until 1963 that the Levitz brothers hit upon the idea that turned their business into a financial bonanza. In that year, Ralph went to Tucson, Arizona to help Sam Levitz, another brother, try to save his own struggling furniture business. To raise quick cash and save on costs, they organized a giant warehouse sale that required the customer to carry away the merchandise. In either event, Ralph and Leon Levitz decided to try warehouse sales on a permanent basis because it seemed likely to bring in many new customers while reducing operating costs. Although the warehouse showroom concept was not new, the Levitz brothers put it into operation on a grander scale than ever before. The first Levitz Furniture warehouse showroom store opened in Allentown, Pennsylvania in September 1963. A second one opened in Phoenix the following month, and a third in Miami in October 1965. Sales reached $12.2 million in the fiscal year ending January 31, 1966, and increased to $18.7 million and $26.5 million respectively in the following 2 years. The business, previously a partnership, was incorporated in 1965 as the Levitz Furniture Corporation. Another store in Dallas opened in 1967 and two more in Tempe, Arizona and Santa Clara, California during 1968, the year Levitz went public. In the fiscal year covering 1968, sales reached $39.5 million, and in the following year, during which 5 more furniture stores were opened, to $67 million. The Levitz Furniture concept of supermarket furniture shopping called for a gross markup of 50% on brand name furniture instead of the normal 100%. Increased volume would enable it to save money in purchasing, selling, handling, and transporting merchandise because of economy of scale. By 1970, Levitz Furniture was averaging more than $120 in sales per square foot of selling space, compared to the industry average of $26.54 in medium-sized furniture stores and $54 in large furniture stores. As a result, Levitz Furniture was able to earn a net income nearly $1.7 million in fiscal 1968 and $2.8 million in fiscal 1969. By the end of 1971, Levitz Furniture was operating a chain of 27 furniture stores, each one generally with a warehouse the size of several football fields and a showroom with 260 model room vignettes, both incorporated into a single building. The furniture stores were located in population centers of at least 750,000 along expressways where land was cheap and railroad sidings were available. Free parking was generally available. 60% of sales were pickup, with almost all the remainder including in a day or two delivery and setup, which each cost the buyer an additional 4%. Each store was expected to yield a profit margin of 4.5% on sales. Ralph supervised the eastern furniture stores from Miami, and Leon oversaw the western ones from Phoenix. Levitz Furniture was receiving its merchandise from about 300 suppliers, but the top 10 furniture makers provided about half the stock. The furniture stores typically opened with well-advertised fanfare, including prizes and loss leaders. Other companies complained that Levitz Furniture advertising campaigns included misleading comparisons between its prices and those of its rivals. The Federal Trade Commission ordered Levitz Furniture in 1976 to cease several deceptive advertising practices, including exaggeration of price reductions and misrepresentation of furniture materials. In 1971, the 34 Levitz Furniture stores had sales of $183.8 million and a net profit of $9.2 million. The company had accumulated at least $47 million from retained earnings and stock issues by August 1971. Its stock had moved up from the American Stock Exchange to the big board, the New York Stock Exchange. Between the original 1968 offering and May 1972, the price of Levitz Furniture shares rose almost 50-fold when adjusted for 3 stock splits. Members of the Levitz Furniture family realized an estimated $33 million from publicly reported sales of Levitz Furniture common stock during the period from 1968 through 1971. Despite Levitz's success, continued rapid growth could be sustained only by substantial infusions of outside capital. However, it was beginning to encounter opposition from rivals like Wix Corporation and Unicapital Incorporated, thereby putting pressure on its profit margins. The bubble burst on September 29, 1972, the day after Ralph Levitz announced that the latest quarterly earnings report would be disappointing after a long string of quarterly gains on an annual basis of 50% or more. In 23 minutes of frantic trading on the New York Stock Exchange, Levitz's stock plummeted from about $47 to $33 a share before further business was suspended because of too many sellers and too few buyers. Compounding Levitz's problems were charges by the Federal Securities and Exchange Commission in June 1972 that the company had broken the law by agreeing to allow the United Brotherhood of Teamsters to organize its employees on condition that the union drive would not be announced or commenced until a 1972 stock issue had been completed.
Levitz pre-holiday sale. You'll find hundreds of remarkable furniture bargains throughout Levitz showroom during Levitz big pre-holiday sale. Going on now at the Levitz near you.
In spite of these problems, Levitz's expansion continued through fiscal 1972 when sales from 49 furniture stores reached $326.8 million and fiscal 1973 when sales reached $380.4 million from 55 furniture stores. Net profits reached a new high of $12.1 million in 1972 but fell to $8.6 million in 1973. With its stock falling below $5 a share in 1973, Levitz Furniture not only lacked the means to finance further growth but developed a cash flow problem. Saddled with expensive leases, the company had a net profit of only $3.9 million in 1974. In 1975, a recession year during which the housing market was hard hit, it lost $142,000 on sales of $326.3 million. Robert M. Elliott of Montgomery Ward & Co. Executive was brought in as president and chief executive officer of Levitz Furniture in 1974. He immediately imposed stringent economies, reducing inventory by 25% and employment by 38%, and also brought the furniture stores which had been operating autonomously under central command. Sales rebounded in 1976 and the company returned to the black. In 1977, Levitz Furniture announced it would place its primary expansion emphasis on gaining deeper penetration in its existing markets rather than venturing into new ones. Accordingly, in that year it acquired 6 furniture warehoused showrooms from R.H. Macy & Company operating under the J. Home stock name in New York, New Jersey, Connecticut, and Boston. In 1979, Levitz Furniture had record sales of $546.6 million and record net income of $20.6 million, but high interest rates and a consequent recession in the early 1980s dealt a severe blow to the housing industry. Company sales and profits dropped in 1980, 1981, and 1982. In the last year, sales came to only $485.7 million and net income to only $8.8 million. Elliott's continued tenure was opposed during this period by the Levitz family, which charged that he had abandoned the company's founding philosophy, deep discounting and rapid expansion. He had the crucial support, however, of Chicago's wealthy Pritzker family, which in 1979 acquired about 23% of the company stock. The holdings of Levitz family members fell from 22.5% to only 5.5% by 1983, the year Ralph Levitz retired as chairman. Levitz Furniture remained the nation's top independent furniture retailer and kept its basic strategy of warehouse selling but increased its store total only to 80. Furniture manufacturers who once saw the company as a destructive force now with obvious relief regarded it as unlikely to initiate new price wars. One manufacturing executive, for example, told Businessweek, "It's not the cheap discount anymore. The furniture stores are clean, have a broad range of goods, tasteful accessories, and well-trained salespeople." Future Levitz Furniture stores were scheduled to be smaller ones in smaller markets, and some would be satellite units for display only within a 25-mile radius of an existing store. Sales jumped to $644.4 million in 1983 and $761.8 million in 1984, while profits soared to $27.4 million and $34.4 million respectively. In 1984, Levitz Furniture was operating a nationwide chain of 84 retail facilities located in clusters of 10 to 14 each in primary metropolitan areas within 6 regional areas covering 26 states. Store size ranged from 64,000 to 155,000 square feet. Late that year, the company went private by means of a leveraged buyout. A group that included members of the board and of management Citicorp Capital Investors Limited and Drexel Burnham Lambert Incorporated paid $318 million or $39 a share in cash to stockholders. A bid in cash and securities by Dalfort Corporation, a company controlled by the Pritzkers, had been rejected earlier. The new private company, which had no participation from Levitz family members, took the name of LFC Holdings Corporation. The investors who initiated LFC rewarded themselves with cash payments of about $215 million from $257 million obtained in new financing during late 1986. Burdened by debt payments, the private company never reached the prior earnings level enjoyed by Levitz Furniture. After fiscal 1989, in which sales came to $929.8 million, the sales volume dropped for 3 consecutive years. Net income hit an LFC high of $17.9 million in fiscal 1989. In the next year, net income fell by half and the company then lost money for 4 consecutive years. No dividends were paid on common stock after 1987. In mid-1993, Levitz Furniture Corporation went public under the new corporate name of Levitz Furniture Incorporated, with 13 million shares of common stock sold at $14 each in its initial public offering. By then, the company held 67 warehouse showrooms and 51 satellite furniture stores in 25 states. Although it was highly leveraged with $284 million in long-term debt and had sustained a string of consecutive losses under the LFC banner, it found one big buyer in the government of Singapore, which paid $23.3 million at prices between $11.50 and $14 a share for 6.5% of the company. On March 31, 1994, net sales increased to $983.6 million from $922.4 million the previous year. Net income came to $17.4 million, but this turned into a loss of $27.8 million with a payment of $37.7 million for early retirement of debt. During 1994, the company bought John M. Smith Company, a retailer with 6 Chicago area homemakers furniture stores, for about $47 million. It also opened 8 new satellite showrooms and 5 warehouse showrooms. On March 31, 1995, Levitz Furniture passed the $1 billion mark in net sales and had net income of nearly $4 million. Long-term debt increased, however, from $286.6 million to $348.9 million, which did not include $89 million in lease obligations. Figures for the first 3 quarters of fiscal 1996 indicated that the company would lose money for the completed year. Levitz's stock turned sour after reaching a peak of $20.25 a share in early 1994, and it traded as low as $2.50 a share in 1995. The workforce was reduced by October 5% in the first 6 months of the year, and a reorganization consolidated the company's 6 geographic regions into only 2 East and West. A 1995 Financial World article calculated the company's long-term debt at $430 million more than its equity. Elliott, who had been chairman and chief executive officer of the company since 1985, retired in 1995. He was succeeded by Michael Bozek in November 1995. In 1995, Levitz Furniture was offering a wide selection of brand-name furniture and accessories, including living room, bedroom, dining room, kitchen, and occasional furniture and bedding. It was purchasing merchandise from more than 350 independent manufacturers and was not manufacturing any of the merchandise sold in its furniture stores. Its 72 warehouse showrooms ranged in size from 62,000 to 250,000 square feet within a single building. Merchandise was typically displayed in 175 to 260 model room settings, occupying 50,000 to 83,000 square feet within the building. The 62 satellite furniture stores were freestanding showrooms ranging in size from 25,000 to 60,000 square feet, although one store had about 100,000 square feet of space. These furniture stores were utilizing the warehouse and delivery functions of nearby warehoused showrooms. Levitz Furniture was selling merchandise for cash or under customer installment purchase or revolving charge plans, but generally did not accept credit cards. During 1995, 38.4% of all sales were for cash and 61.6% under customer credit plans. Customer credit obligations were being sold to General Electric Capital Corporation. The company's properties at the end of May 1995 included 25 owned warehoused showrooms and 8 owned satellite furniture stores. Another 47 warehoused showrooms and 54 satellite furniture stores were being leased. Levitz Furniture also owned its 94,000 square foot corporate headquarters in Boca Raton, Florida, and a 35,000 square foot facility in Pottstown, Pennsylvania used for accounting offices. On December 21, 1998, Levitz Furniture announced it would close 27 furniture stores across the United States and lay off 25% of its company workforce. The company downsized its warehouse system from 65 to 17 sites. The furniture market underwent a prolonged nationwide downturn after the September 11 attacks and was hurt again in late 2007 by the 2007 subprime mortgage financial crisis. Levitz Furniture filed for bankruptcy protection the final time in October 2007. As of that time, it was operating nearly 80 furniture stores, mostly in the northeastern United States and on the West Coast, under the corporation PLVTZ LLC. In October 2008, Levitz Furniture, with bankruptcy court approval, converted its Chapter 11 case to Chapter 7 bankruptcy protection and started liquidation sales, which was caused by the Great Recession of 2008. The company was sold in bankruptcy to a group of bidders led by Hilco Merchant Resources that acted to rapidly liquidate its inventory and close all remaining furniture stores across the United States.
When you get ready to buy furniture, there's one thing you should remember: Levitz Furniture. We're the world's largest seller of name brand furniture. Nationally advertised brands like Lane, Kraler, Thomasville, Bassett, Simmons, and many others. And only at Levitz can you buy these name brand furniture items at the lowest possible price every day. So when you're ready to buy furniture, the only thing you have to remember is Levitz.
If you have any fond memories, please indicate it at the comments below. Thanks for watching, subscribe, and like.